So in today's video, I'm going to be going over how you can invest your next stimulus check. It looks like we will be getting one. I've been seeing this all over the news and YouTube. So I thought it'd be a cool video to make on how you can invest your next $1,200 stimulus check. There's a chance it could be more than $1,200, but for the sake of this video, we are just going to use our last check as reference. So I'm going to go over a few ways that you can get started investing your first $1,200. So there's a couple options. If you don't already have a brokerage account, you can sign up with Robinhood or WeBull. And I have a link in my description, and it'll get both of us some free stocks, which would be much appreciated. I'll throw up some screen recordings of how both of these look. I really like Robinhood's layout. It's super simple and really clean. WeBull's nice too. It's just for newer investors, it can be kind of confusing, and the layout isn't as simple as Robinhood. So just pick whichever one you like most and go with that one. So here are a couple of ways you can get started by investing $1,200, and this is based on a 3 to 5 year holding period or holding forever. This isn't for swing traders or day traders. This is just how to get started and build a solid portfolio. As you can see, I like to diversify. I don't just pour everything into one stock, and this is kind of how I would lay it out. So I have a couple different options down here. Growth number 1 would be full shares, and growth number 2 is fractional if you have access to that on Robinhood or M1 Finance. And I know everyone's going to have different opinions in the comments of what I should have put up here, like I should have put Nvidia up here or Pepsi. This isn't for you to follow exactly. This is just an example and how I would lay it out. If you don't agree with something up here, then just take it out and put that money into a different stock. So growth number 1, you can see how I laid it out. Microsoft, Apple, Disney, Square, Facebook. Those are all growth stocks. I know that Microsoft, Apple, and Disney used to pay dividends, but I'm focusing more on the growth of those companies because I see a bright future with them. Number 2 would be if you have access to fractional shares, because obviously right now Tesla, it would pretty much take up your entire stimulus check. So it'd be nice to be able to invest like $350 instead of $1,100 in Tesla. And I see a huge future with Tesla, so it would be nice to still be able to get access to some of their shares. Then I'd go Microsoft, Apple, Square, Amazon, or any FANG stock, which would be Facebook, Amazon, Netflix, or Google. You can pick for yourself. Number 3 would be dividend long-term investor, and I would go 3M, CAT, Johnson & Johnson, Coca-Cola, AT&T, O Realty, which is a REIT, and BNS. And you could hold this in like a Roth IRA. That's where I hold my dividends, or you can hold it in Robinhood as well. And as far as the bank stocks, I just chose BNS because they pay a nice dividend and they're kind of cheap. You could choose like Bank of America or even Wells Fargo if you wanted, but watch out, they might cut their dividend next month. So here's what that dividend layout would look like. As you can see, most of these are pretty safe dividends. They have nice scores, so that just ensures the company will pay you that dividend because it is not promised. It's more of just like thanking you for holding their shares, and they could cut it at any time. But you can see on the right side the annual income you would earn, and you can see that this is just about that $1,200. See, 100% is likely safe, so this is a really sound portfolio, and it would generate you 49. You can see your income and when it's paid. So a realty pays you every month, and yeah, that's pretty much it. So here's the last option, and I definitely couldn't leave this one out. It might be the easiest and smartest investment you'll ever make. This is to start a Roth IRA, which is basically a tax-free retirement account. When you retire, it's tax-free. You pay the taxes up front, so it's really good for people who are in a low tax bracket right now. You will contribute your $1,200 to it, and if you can max it out every year, that's awesome. If you're under 50 years old, it's $6,000 a year is what you're allowed to contribute. And if you're over 50, it's $7,000. So my 2 picks for index funds would be VTI and VGT. There's tons out there, so definitely do your own research and pick which one you like best. But the average annual return of something like VTI would be 7%, and it mirrors the S&P 500. So basically these are index funds that have a ton of stocks within them, so you don't get stuck having to pick the right stock or the best stocks. they do it for you. In my opinion, it's not as fun because I really love staying up with the stock market and finding new stocks, and it's just what I like to do. And especially in times like these with the whole pandemic, these opportunities don't come very often, like the '08 recession and all that. A lot of people who invested heavy in that recession came out of it with a nice portfolio and built their wealth very well. But in most years, something like this would make perfect sense, and I just wanted to show you guys more about it. So here's a little bit more about VTI and VGT. VTI is the Vanguard Total Stock Market ETF, and it holds 3,466 stocks in it. I like this more than VOO because it also has mid-cap and small-cap companies in there. Here are the top holdings, top 10 holdings. So you have Microsoft, Apple, Amazon, Facebook. I mean, just a nice, diverse portfolio, and you really don't even have to watch these stocks. You could just buy these and forget about it. You never have to even check your portfolio again. VGT is a little bit more information tech based, and I like that as well. So both of these are awesome picks, and you really don't have to think about it, which is nice. So here's the last part of this video, and this is a compound interest calculator. So this is what your Roth IRA would compound to if you put an initial deposit of $1,200 in, and every year you put in $1,200 for 43 years until you retired. Let's say you're 22 and you did this for 43 years and you want to retire at 65. Like I said, the average rate of return for the stock market is 7%, and that would be annually. So in 43 years, that's what your balance would be. But obviously, you're going to grow up and you're going to get a good job, and you probably will be able to put $6,000 in a year and max it out, and you can retire a tax-free millionaire. So that's really all it takes. This is the stuff they don't teach you in school, and they should. But yeah, I'm glad I found this out when I did, and that's what I'm going to be doing after I take advantage of this pandemic. As always, guys, thank you so much for watching. We gained 105 subscribers this week, which is awesome. We're closer to that 1,000 subscriber count that I'm really trying to get to. So I appreciate all of you so much. At 1K, I'll reveal my entire portfolio, dividends, and growth. Yeah, and if you want those free stocks, check out the links in my description. That's pretty much it, guys. Have a good one.